Welcome to the Real Estate of Life with Kevin Riles. This week, I'm back. I know I've been gone, but I have family stuff going on, good family stuff, but family stuff going on. Mr. Producer was on my case about getting back, and so this week I want to talk to you guys about the multifamily market in Houston. What's going on with it? Can you still find deals? I'll give you my opinion as far as that's concerned. So DJ, hit the music, please.
Support for this program comes from the Digital Broadcasting Network, presenting podcasts and web series from everyday people who have an extraordinary passion to make the world a better place.
Hey, welcome back to Real Estate of Life with Kevin Riles. This is your boy, Kevin Riles. I've been gone. I know. I've been gone for the last couple of weeks. I haven't gotten the consistency. I apologize. It's been just a whole lot of stuff going on. Basically took the Memorial Day week off, and the week after that, my daughter turned 16. Happy sweet 16 belated birthday to my daughter. I was there for her birthday, but just in case she listens to this, which I don't know, even though my own daughter and my own wife listen to my own podcast. That's a whole nother conversation. But she turned sweet 16, so we had the party, and then we had graduation. My nephew graduated. Shout out to Josh. Graduated from high school. We had a whole lot of stuff going on, so I've been gone and remiss. And Mr. Producer has been on my case about taping. And usually y'all can tell when I haven't taped in a while, because you'll get a version of our podcast where I've cut and recorded myself, and you can see the quality of the audio and the video is not as great when I do it myself. And so, but I'm back, and so I'm excited about what I have to talk about today. True confessions. Mr. Producer's been on my case about recording, so I said, okay, we're gonna record today. I don't care what happens. And so I originally set a time at 1 o'clock to record. Then I texted him and said, hey, can we do 1:30? He said, no, that should work, no problem. Then he gets here. You would think I've been talking back and forth with him all week. He gets here and I said, I have no idea what I'm gonna talk about. And so I decided in the last literally 2 minutes what I'm gonna talk about today, but I think you will be pleased. And what I'm gonna talk about is the Houston multifamily market. And what's going on. So I'm basically gonna give you a market update. And the reason I'm gonna give you a market update, because I was in a meeting today, and I was in a meeting with a lender, and the lender doesn't do a lot of multifamily, but is interested in doing it. And I was kind of giving him a market update, and something just hit me. It's like, you know what? I need to kind of tell everybody else that the other reason I'm doing it is I got an email from another agent the other day, and she asked me, hey, I have a client, cash buyer, that's looking to buy multifamily. And I know you're the multifamily guy. So I said, great, what are they looking for? And then she tells me that they're looking for distressed multifamily in the Houston market. And I'm gonna do like the kids, boo, that don't exist in this particular market. And so they basically were asking for a property from $2 to $3 million with a 9 to 11% cap rate. So I'm telling you right now that just doesn't exist in this particular market. And so I say, you know what, I need to kind of let people know what's going on, because things have changed a little bit since the last time I did a market update. And so I thought it'd be important. So I guess market update portion number one is cap rates are down, which basically means that prices are up on multifamily property. So when a cap rate, if you remember, if you can go back a couple, it's been a while since I've done the calculations in commercial real estate, but cap rate is a measure of price, a ratio of price to income. And so the lower the cap rate, the higher the price, right? The lower the cap rate, the higher the price. And when you see something that says 6% or 5% or 5.5% or something of that nature, then that's a lower cap rate, which means that it has a opposite effect on pricing. And so because of that, the demand for multifamily has been so significant that it has actually driven prices up and cap rates down, right? And so I remember a time, I guess it's many years ago now, where the average price on a C-class multifamily in Houston was $30,000 a door. Well, guess what? That's now $65 a door, $60 a door. So a deal right now is in the 40s. A steal is in the 40s. Actually, a deal is probably somewhere in the 50s. Average cap rates have been pushed down on C-class to in some cases, the low 7%. And usually on a C-class property, especially a value add property, you would expect the cap rates to be at least in years past, kind of in that 9 to 11% type of range. But yields are just coming down because there's such a demand for multifamily. So for a seller right now, if you're looking to sell your apartment complex, in my 20-year career, there has not been a better time to sell a multifamily property. The prices are at a point where even value add stuff is going for a premium. And when I say value add, I mean stuff that still needs work. If you are a buyer, it's hard right now to find a deal. It is. And I transact. And so I'm always hopeful that there are deals out there, but it is just so freaking hard to find a deal. And so what I've had clients doing now is they're trying to diversify their portfolio, and they're looking at other income property types like industrial and retail. And so I find myself doing a lot more of those deals as well. So are there deals in multifamily still to be had? Absolutely. I'm not saying that there are not any deals out there, but you are having to look a lot harder and around a lot more corners to find them. So point number one is that cap rates are down. Point number two, again, this is great for owners and buyers as well, is rents are at an all-time high. Rents inside of multifamilies are all-time high. I can remember time, especially on C-class. And the reason I keep mentioning C-class, because C-class typically, in my experience, has been the most profitable of all the classes and the easiest ones to get into for smaller investors. And so used to be rents were sub $1 a square foot. So if you had an 800 square foot apartment, you might rent that out for $650. Or for most places in Houston right now, you're getting $1, $1.10, $1.25 a square foot. And so it is amazing, it's amazing that rents have pushed up pretty much no matter where you are. So even C-class rents are plus $1 a square foot. And the way I was explaining earlier to the banker is that C-class to me is one of the greatest investments, because no matter what the economy is, you always have a tenant. And what I mean by that is on a C-class property, which by the way means an older property, typically you have, when an economy is good, everybody moves up a level. So people that would normally be renting a C-class, they move up to a B, and the folks that would normally be renting a B move up to an A-class or a brand new property. But when the economy's bad, everybody moves down a level. A's go to B, B's go to C's, and C's go somewhere. I don't know where they go. There's no such thing in commercial terminology as D. And so you're always in the middle there. You may have to discount rents, but you're always kind of right smack dab in the middle. And so I say all that to say that there's no better time from a rental standpoint as an owner that rents are just doing that well. So that's point number two. And then point number three is properties are probably at their most profitable because rents are higher. And I think landlords are getting a lot more efficient in managing their property. So with all that being said, with those 3 points, if the buyer out there like, well, hey, I still want to buy a multifamily property, can I find a deal? The answer is yes. Can I find a value add deal? The answer is yes. But it may not be a functional value add. In other words, it may not be a property where you need to replace the roof and do all the upgrades in the property to get the rents up. There's a lot of properties out there that are owned by management, folks that are managing these properties that are not efficient. And a lot of times your value add comes at being more efficient in your management. And so if you're more efficient in management, then you can derive a greater profit. So you can't always look at the fact that, oh, there's nothing for me to physically do with the property, and so I'm not interested in it. You really do need to get into the numbers and see if there's an opportunity to do that. So I guess in a word, the multifamily property market in Houston is HOT, is hot. There's no doubt about that. You still can find deals, you just have to look for them a little bit harder. So with that being said, that's your multifamily market updated for Houston, and I will see you guys next week. Do you have questions about any of the topics I'm talking about? If you have questions, let me know. Email me at kevin@kevinriles.com. Again, that's kevin@kevinriles.com. I'm going to do a podcast just on the questions that you guys are sending me. So feel free to send them to me. Again, that's kevin@kevinriles.com.